let's talk about real estate. And today I want to talk about this recent article that was published by Redfin that tells us that about 15% of the pending home sales across the nation are currently being canceled by buyers. And this is a pretty high number. And it tells us that even though in the month of September, we saw rates tick down quite a bit, we're still seeing record high cancellations in many markets across the country. And of course, this is not a great sign overall for the housing market. So first off, we'll jump in, we'll take a quick look at the article, and then I'll talk through what I think is happening and what's likely to continue happening as we move into 2026. All right, so getting started, here's the article. It was published just a few days ago on the 22nd of October, and it's titled, "Sellers Are Getting Ghosted. 15% of home buying contracts were canceled in September." And if we scroll down here, we see housing costs are frightful and economic jitters are in the air, leading some buyers to leave sellers in the lurch. Of course, I think they're having a play on Halloween here with some of the language. Just over 53,000 home purchase agreements nationwide were canceled in September, equal to 15% of homes that went under contract that month. That's up from 13.6% a year earlier. And as you can see here, we have been similarly high a few times over the past couple years, as well as in 2020. But you can also see here that typically we're in this, maybe sort of 11.5% range of cancellations. And now we're headed back upwards to this 15% range. So what is going on here? We saw rates come down noticeably in the month of September and then again now in October. So why are we seeing record high cancellations once again? Well, what's happening is that home prices really haven't come down much in most parts of the country. And on top of that, rates are still relatively high. And at the same time, we're seeing a lot of weakness out there in the economy. We're seeing job losses at record highs across the country and all kinds of other economic indicators that are showing that there is weakness out there economically for many people. In fact, we're seeing spikes in delinquencies on credit card payments and car payments. We're also seeing increased searches for how to deal with my mortgage or what can I do if I can't pay my mortgage on Google, and a whole plethora of other evidence out there that people are generally hurting and suffering from all the inflation we've had over these last couple of years. So what happens is somebody's excited, they really want to buy a home, they know they should buy a home, they write an offer, they get into escrow, and then they start to see some of the numbers start coming out in terms of what the closing costs are going to be, what the taxes are going to be, what the payment and interest and repairs are going to be. They start doing their inspections and they realize that there's a lot of stuff wrong with the home that's likely going to need to be repaired relatively quickly. And then of course you have the other side of the coin, which is a lot of sellers and real estate agents which are still stuck in the mentality from 2020, 2021, when the market was booming, and they're trying to get the price as high as possible and minimize any credit or any repairs that the seller has to make to as small as possible. And so the buyer's realizing, man, this is a big bite to swallow. Do I really want to do this at these high rates, this high payment, have to deal with all these additional expenses, property taxes, and so on? And so they're backing out. They're getting cold feet. Because a real estate transaction typically takes, 30 days in escrow. Of course, it could be more or less, but on average, maybe 30 days. That gives a buyer a lot of time to brew on the situation and determine whether or not they really want to move forward. And so what's happening is we're seeing more and more people decide through that escrow, hey, this isn't for me. I don't really like this house as much as I thought I did. And so they're canceling those escrows. And that's why the rate of cancellations is really starting to take off again. And real quick, if you yourself need help with real estate here in SoCal, in Los Angeles County or Orange County, definitely reach out to me. I'm here to help. Now let's take a look at where a lot of these cancellations are the highest. We can see here, these are kind of the top metros. You have Tampa, San Antonio, Atlanta, Orlando, Fort Worth, Riverside, California, Fort Lauderdale, Jacksonville, Texas, and Las Vegas. So a lot of places in Florida and Texas are experiencing the highest cancellation rates. And then if we look at where they're the lowest, we see San Francisco, California, Nassau County, New York, San Jose, Oakland, Milwaukee, Montgomery County, Seattle, Washington, and so on. So to an extent, some of the more expensive in-demand areas, the Bay Area, are still doing quite well. And that's what I've been seeing myself. Markets are definitely heating up here in Southern California. A lot of action out there again because these rates have come down. But of course, you have a lot of buyers with a lot of wealth in these areas, and there's not that much inventory, relatively speaking. And there's always going to be some people that have plenty of money to buy a home. And so those homes are getting absorbed. But in some of these other parts of the country where prices have risen drastically over the last 3, 4, 5, 6 years, because prices in places like California were so high, there was a huge outflux from California into some of these other markets. And so that's where we're seeing the pain and these cancellation rates starting to rise. Now, what about how things are going to look heading into 2026? The Fed is obviously trying to lower interest rates. In fact, I think they're going to lower 25 basis points today, actually. But at the same time, there's a lot of pressure out in markets for rates to stay high because of the inflation that we're experiencing. So it's going to be interesting to see. I suspect a lot of these markets that are theoretically somewhat overpriced because they've grown too much over time are probably going to continue experiencing weakness, especially if rates stay relatively high for another year or two. So it is possible that the Fed lowers maybe a quarter point today, maybe another quarter point in December, but then maybe they back off on any further rate decreases, which means mortgage rates might settle in the 5.5% range or somewhere thereabouts. And I don't think that's going to offer enough relief in some of these areas that are probably priced too high, where there's a lot of new supply of homes that are being built. But in other areas like Southern California, like where I'm at in Los Angeles County or Orange County, a lot of times there's not a lot of new construction, and there's a lot of buyers that want to live in these areas. They have work here, they have to be here. And so I think as rates trend down even just a little bit, 5.5%, that is going to ignite the market. Prices are probably going to keep going up as a result of these slightly lower interest rates. Demand will increase and inventory will fall. Of course, I'll be keeping an eye on it. I'll keep you guys informed. Do me a favor, leave your comments down below. Let me know if you have any questions. Again, if I can help you with real estate, reach out to me. Don't forget to like, share, and subscribe. Appreciate you guys watching, and I'll see you on the next video. Take care.